Welcome to TheoTrade. This is Don Kaufman. It's April 12th, 2023. Just about 15 minutes left inside of the trading session here on this Wednesday afternoon. The SPOOs are off just about 15 handles, but I gotta tell you, can anything move this marketplace? Look, we've had CPI this morning. All right, created a little short-term volatility. We had obviously some Fed minutes, statements made out of the ECB, that's the European Central Bank. We actually had oil report today, and you can see oil rip into the upside. But I'll come back to the fact that not CPI, not ECB, not Fed, not oil, nothing can break this marketplace from its present range, which kind of brings us to the question, are we on the verge of volatility? All right, let's actually break down why I'm actually asking that question here on this evening's video. As I was saying moments ago, SPOOs are off just about 14 handles, and it's been some chopped out, some fast trade, but there's not a discernible feel to markets right now. It is what it is. Order flow is just piling in. And what I mean by that is news breaks. And, you can see the CPI report this morning and order flow. And I kind of say it is what it is. I'm not even looking anymore. Like, who cares what the actual CPI number is? It just doesn't make a difference. So initially it was good until it was bad, until it was really bad. And then, of course, we actually had Fed minutes, and did anybody care about that? Maybe a little sell side activity, a little more volatility. But I think it was actually comments that were from the ECB, which is the European Central Bank, at the same exact time as the Fed minutes came out, sparked a little bit more vol. But nevertheless, all of this is for nothing, because all we're going to do at this point is probably trade back down to a very marquee level inside of the marketplace. What is the marquee level? Right here, you see that little line on the screen right across your screen? Yeah, that one is 4106, and it just looks like it is our destiny to hit the gravity point of 4106. I have mentioned this just time and time again. All we're doing right now in markets, pinging from level to level. And this is not a marketplace, and I just got to reiterate what I was talking about in the weekend update. It's not a marketplace that's about being bullish or bearish. It's simply not. And I think a lot of people are going to point out, well, no, we went from 3,800 and we rallied all the way up almost this morning to 4,200. Done. That is inevitably a significant rally. And I'll make the argument all day long over here. Okay. Again, we've seen this movie before. And for that, we open up once again the 180-day 4-hour. We've seen this movie before, where we rally up, we fade, we rally, we fade. All right, and literally are just pinging back and forth from some of these gravity points. Nevertheless, okay, what you've got to be concerned about right now is once again coming under this 4106, and this is actually why I'm saying, are we on the verge of volatility? And the reason I've questioned, and the reason I'm bringing it up is, we took a shot to the upside today. We missed coming up to the 4211. 4211 is another absolutely pivotal place for the S&Ps. I'm going to bring it into scope right now because, of course, I've got it marked off on my chart. We came up to the upside today. We missed it. We did not hit the 4211. And ultimately, we start to resolve back down. Okay, if we start to fall below this 4106, people, it is a long ride down once again. And, one of the things it's leaving a little bit more to be desired. You're seeing the S&P sell off today, but there's just no volatility. It's just not playing a role. Okay, like we're not seeing vol spike right now. And you're, of course, going to question, why then are we on the verge of volatility? Because what I'm going to tell you here is critically important. We have hit the level of 4106 so many times, the marketplace just doesn't care at this point. We just passed through. And by the way, do not expect VIX to be rocking to the upside. Why? We just passed through CPI. Of course it should be down, right? Oh, that's a relief. We're through CPI. We just passed through Fed minutes. Oh, that's a relief. We're through Fed minutes. Okay. We just heard from the ECB. We had, oil. Okay. By the way, oil, not usually like too big into this, but oil was ripping earlier in the day. I mean, oil was, 81.40 and took off. This thing is up another 2%. So oil, that's not going to be good longer term for inflation. Nevertheless, don't look per se for volatility to be up. What you have to look at this point is a major level, okay? And that level right here, this 4106, if we start to resolve a little bit lower, look what has actually transpired. You go a little bit lower, all of a sudden we're on a mission down to the 39.31. Just assume right now that directional bias is all about just pinging between levels. So we hit the 4106, we'll drop down to the 39.31, okay, and obviously have a little bit of a reset from there. Nevertheless, okay, I think we're at a critical juncture in the marketplace, and we really are, in fact, on the verge of some volatility. Now, push all sectors aside for just a moment, okay, because, well, you have financials. They're going to be coming out, Friday morning, the likes of Wells, I think Citi, JP Morgan. There's some big boy earnings that are going to be coming out later this week. And to me, financials are obviously, it's going to be pivotal, right? Financials are still just scraping to the bottom of the barrel here, right around the 32 mark. Financials are going to break, obviously would put some pressure into the S&Ps. But the big one, of course, is also, if you've not taken a look at the monsters of tech lately, I mean, big tech has had a phenomenal rally. Look at stuff like Microsoft, and these are all pivotal underlyings. Again, I think you need to push all of it aside and recognize that the S&Ps, okay, are in large part, they're in charge at this point. We start to break and lose this level, it's just going to come after every single sector. Clearly, tech is going to be in the crosshairs over here. Stocks like Nvidia, which has been impenetrable lately. Nvidia breaking a little bit lower. Tesla has actually not been nearly as impenetrable, if you will, as Nvidia, but Tesla actually seeing some sell-side activity, more sell-side activity than we've seen in quite some time. And we're getting some play to the downside, even from the likes of like Amazon, which has had a little bit of a rally lately. So we're going to be watching this carefully. Again, it's kind of through and through. Everywhere that you look over here, we're just kind of either stagnating or seeing some sell-side activity in the marketplace. But again, stop looking so much at volatility. Volatility should effectively be down in a marketplace that has gotten through so much at levels that we've just continued to hit day in and day out. All right, let's switch gears for just a minute as I do each and every Wednesday. Let's bring up the SPX, okay? One other really, I think, critical aspect for the marketplace this week, and again, I can, give you reasons to bear up right now in the marketplace, but there's one aspect that kind of, almost pushes me back a little bit from the marketplace and, makes me a little bit uneasy about a lot of directional bias. And that's this here in the SPX. And I'm going to tell you exactly what it is. When I say it kind of pushes me back from the marketplace, I'm like, to be as objective as I possibly can. Look at this. You've got 1, 2, 3, 4, 5, 6, 7 trading sessions. We have simply not moved in 7 trading sessions just below like a 20 VIX. That just does not sit well with me. The other aspect about this is last week, we did not hit the upper end or lower edge of the expected move. This week, almost unequivocally, like you're going to be hard pressed to ever find 2 consecutive weeks that the SPX doesn't hit the upper end or lower edge of the expected move. So at this point in time, I think you have to make an assumption for Thursday and Friday's trade. We're coming down here, we're going to smoke up here. Now, obviously, the picture that I have painted is clearly more to the bearish side of it. But granted, I can't see what the earnings of JP Morgan are going to be. Jamie Dimon's going to come out and actually, slam dunk one at the last minute over there and the market's going to rally into it. I can't see that. But I can tell you right now that gamma risk, okay, is going to push us. If we go just a little bit further from here, gamma risk is actually going to push us, and we're going to make, okay, that much more strategic move. The lower edge in the SPX expected move is somewhere right around 40.28. Now that's 40.28 to the SPX, right? The S&P futures are trading at a vastly different level. There's almost about a 25 point to 30 point differential between S&P futures and, of course, SPX. So if the SPX is trading 40.30, that actually brings the S&P futures somewhere in the neighborhood, again, of like the, considerably lower, but that would actually bring them to like the 40.50 range. Anywhere from 40.50, 40.60 kind of range in there. Obviously, that kind of resets at a nightly basis. Nevertheless, I think it's critical to actually look at this level and specific to the SPX. There's times where I'm talking about S&P futures, and there's times I'll talk about like 4106. Okay, but when it comes to the SPX, there's a reason that I hand draw these expected moves. Okay, and the bottom line is to be deadly accurate. To be deadly accurate on this one, I'm telling you right now. Okay. From a probability point of view, there's an incredibly high probability we hit the upper end or lower edge of the expected move. Evidently, right now, we're leaning a little bit, okay, leaning to the sell side, but we first have to clip into the S&P, okay, that 4106. And after the 4106, we'll kind of reassess from that point, but we are leaning very, very mildly to the downside. Obviously, tomorrow morning, you've got PPI. In fact, we're just chock full of more data drops coming out over here. Tomorrow morning, you've actually got a PPI report. On Friday, I would be, less about retail sales. Retail sales are going to be pretty important, but much more about some of the banks that are coming out with some big numbers. So again, leaning to the downside, lots of big numbers coming out. It's going to be an order flow free for all. Don't necessarily look for volatility to confirm any of the moves. What you want to see, and let's get really, really specific. You want to see us first tag the 4106. If we're going to go lower from 4106, like this is the gravity point, if we're going to actually head lower from 4106, that is when you'll start to see movement in terms of volatility. That's when you'll see a pickup both in VIX and vol futures, because then it's a long ride down. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.